I spent some time cobbling together the pieces necessary to come up with my full potential valuation for Bitcoin, by starting with figuring out how much value is out there. So what's the total global asset landscape? And my triangulating and pulling in various data sources came up with $900 trillion. There's $900 trillion of value out there in the world in various store of value buckets.
Explain this to anyone who's listening or watching YouTube.
Yeah. So there's a bunch of different buckets here. These are your different store of value categories. You've got real estate, you've got equities, you've got bonds. You also have these smaller categories like gold, art, collectibles. And of course, you have money itself. So, how much money is there? There's $120 trillion of money out there. And then you've got this tiny little thimble of a bucket that's Bitcoin. It's now actually about 500 billion. But so 500 billion out of $900 trillion asset landscape, that's 1/2000th of the world's value is currently Bitcoin. And all of these different categories have evolved over time to be in equilibrium because of their respective properties. Real estate is hard to make more of, right? So we've stored a lot of value in real estate because it's a good store of value asset. These all shift over time. And Bitcoin in particular has this inherent mechanic of increasing scarcity built into it that throws off the scarcity balance that's in this picture over time. Because Bitcoin gets more scarce, it will, in theory, attract more value into it because in 6 months, it becomes as good of a store of value as gold, which is currently a $12 trillion bucket. Specifically because the current inflation rate actually becomes a better store of value than gold. The amount of gold mined every year is 1.5% to 2% every year for the last century. Bitcoin right now is 1.8% issuance per year. And in 6 months, when the halving happens, that drops in half to 0.9% issuance. And in that moment, it becomes a better store of value. It gets debased, it gets diluted at a lesser rate than gold.
But can you really only say its utility as a store of value only based on that one factor?
Great point. No, this is one element that I think is actually undervalued.
Okay.
And part of that perspective is informed by Saifedean and the Bitcoin Standard, where he really makes the case for why gold emerged as like the store of value in the physical world up until 100 years ago, really, up until the advent of central banking in 1913. And since then, everything has gotten a little wonky. Gold emerged as the winner because it's harder to make more gold than it is any other commodity. It's easier to make everything else except gold. You have to mine it. It's very hard to find and mine. And so I think that is the driving tailwind behind Bitcoin's value appreciation over time, among its many other attractive properties. I think that's kind of like the heart of it. So then from a exercise point of view, if you believe that, if you understand that Bitcoin is going to become more scarce, it has this increasing scarcity, it becomes a more attractive store of value. In the digital age, it becomes, the Lindy effect of it being more proven out continues. People get comfortable with it. They stop believing that it's monopoly money. They start realizing that there's substance here. It starts to attract value from people who are holding value in these other buckets. So, like today, $300 trillion is sitting in bonds, which has lost a tremendous amount of value over the last 2 years because of the sovereign debt crisis that we're facing. Like the amount of debt in the world and the deficits that governments are running, particularly the US, necessitate that we are going to have to print more and more and more, and inflation is going to be a problem. We have to inflate away the value of those bonds, which means that they necessarily will be a negative real return asset class over the coming decades.
So interestingly, people who are buying bonds now and thinking, oh, great, I'm getting this return. We've talked about people saying, oh, well, I might as well just park my money in bonds because I'm getting 5%, 6%, 7% return, whatever. I don't know what the returns are. they've really been gaslit because actually you're losing value because of the inflation rate.
Absolutely. In my opinion, yes. It's funny because it's so much better than it was, right? Like they're getting 5-6% returns now, 5%. But what's hidden there is that inflation risk of like, over the next decade, what are we going to average in terms of actual monetary base expansion? It's going to be something like 7-10%, in which case the delta there is what you're losing in real terms every year.
I think there's a way of quantifying it though that people think about. They're like, well, I know I'm going to get that 5%. I'm getting more dollars. And I think some people aren't doing that computation in their head. It's just, I'm getting more dollars.
Right.
And whereas with something like Bitcoin, they're like, well, it might go up or it might go down. Or if it stays the same, I'm missing out on my yield. But they can't, it's not an easy comparable.
Bitcoin feels risky.
Yeah.
And in fact, bonds are the risky thing, in my view, because of this problem. You get the guaranteed nominal return, but this massive hidden risk. And on the flip side with Bitcoin, it's volatile. The price is all over the place, but it has guaranteed increasing scarcity built into it. So if you're looking at it at a 4+ year timeline, there's reason to believe that Bitcoin is the lower risk asset than bonds. And I think that capital will wake up to that and start to migrate towards Bitcoin away from bonds and other asset classes.
And some of that will come down to timing and how much migrates to it. I think there's always a risk if too much migrates too quickly, then the price appreciates too much and the people buy at the wrong time. Then there's that redistribution effect. We just talked about this with Pierre Rochard. Essentially, when people make a lot of money in Bitcoin and there's a bull market, then there's a redistribution which leads to a bear market because people are like, oh, I made loads of money. I'll buy a car or a house or pay my parents' mortgage off. So I think we talked about this necessity for Bitcoin's adoption to be not too fast.
Yep.
So I don't think this can't all happen at once.
No, certainly not. And my view is that what we've seen, the series of bubbles every 4 years continues. We have a bull market, a bear market, a bull market that turns into a bubble. Yep. People get too excited, they overextend. We get higher than we should be, and that necessitates a crash, and then it's very painful, and it resets, but the base is higher, right? So we have that higher low every 4 years through time, and it's the bubbles in a funny way that are kind of the feedback mechanism to keep things on a steady path, because it wipes out the excessive enthusiasm every 4 years because of the crash. And the fundamentals underneath are what continue to rise.